You're looking at a daily chart of CROX. Welcome to my daily review. And I just wanted to point out CROX here. It's been on top stock at MC stock charts for a long time. It broke out of this base here and it had a buy point opportunity to buy here. Then it ran up, pulled back to its 50 for the first time after the breakout, which was the second buy point that we had for it. And then it actually traded below its 50 and then had this little downtrend line here, which was our third buy point there at about 128. So if you didn't get it at 128, or if you didn't get it here at 110, if you didn't get it at 80, this thing's setting up for another area here at 143.50. They have earnings on Thursday. It could well be a buy the rumor, sell the news, and this thing could pull back to its moving averages and offer another opportunity, or it could just rip up to 160 or higher. There's a lot of good news priced in, but I've been talking about it for a long time about how undervalued it is, and now it's got a multiple of about 13. 2.5 times sales, market cap of 9.3 billion, with about 3.65 billion in sales last year. And the thing with this stock is it's got a little bit of debt, quite a bit of debt from the the Hey Dude acquisition, but it's a cash cow, and return on equity is crazy, and the up down volume 2.0 and the accumulation distribution ratings very high. So this stock is in demand, and it's just trading higher. I think there's a lot of short interest in it, and that's shorts covering before the event on Thursday. But anyway, just keep your eye on it. If you don't own it, it might give you another opportunity to get in. If you do own it, there's nothing to do here but just wait for earnings, and I'm pretty sure they're going to be good. It's just how the market reacts to it. Another shoe stock, it's all about the shoes today. The shoe stocks were killing it, is On Holdings. This one made another new high today, and I know quite a few of you got it here and was running out of patience here as it traded below its 50 before earnings, and it gapped up on earnings, and then it formed that little flag pattern, and that I think it was like something like that we got in about $30 here, and now it's up more than 10% from that area. And On Holdings, they reported earnings a while back. What is it, May 16th? I don't know if that's correct or not. Maybe it is. But Deckers is another one with their UGG shoes, and their Hoka running shoes are in the casual wear space. And it's always winter somewhere with the Uggs, and they've really broadened their Uggs line. This thing is just a freight train trading higher. It's got it's got twice the multiple of CROX. I don't know why. 12.9, call it a 13 billion market cap. Does not have the they have the exact same revenue last year, 3.65 billion, but CROX has the growth, and I don't, the only thing I can think of is the CROX has the debt, and they also, they sandbag guidance telling Wall Street that it's only going to grow like 10 or 15% this year, and we're going to find out Thursday and see if they raise forward guidance. But Deckers is just a machine. There's nothing to do. If you own this stock, there's nothing to do but hold it. I wouldn't be chasing it way up there. Skechers looks good here, 49.56, and it's starting to push away from its a buy point, but it still looks good to me. And like I say, the shoe stocks are on fire. These guys are a little more promotional, and they advertise a lot, so they don't have the margins. They do have some cash flow, return on equity not bad, but the gross margins down here at the bottom, 48, is not up to CROX standard at 52, or even ONON, which is 58, because they charge a lot for their shoes. So Skechers a little more value. But anyway, those shoe stocks are doing well. I want to stay with retail because Lululemon is on our watch list. You can see why. Gapped up after earnings, formed this little shelf pattern. Now it's starting to push away. Still, to me, it's actionable. Looks good. There's a lot of retail stocks that are looking strong here. There's ULTA Beauty. I just like looking at the weekly chart here. Just a thing of beauty. Grind tire. Nobody talks about it. Just a cash cow, cash machine. Look at the cash flow on this thing. Return on equity. Nothing to do but just count your money with this thing. Good leadership. Once again, it's got a 23 multiple, which is pretty rich for a retail, but it's been delivering the goods. Elf took a day off today after 11 consecutive sessions higher. This dog pulled back. What's wrong with this thing? I expect, something like we had in January, maybe a 2 or 3 day event where it pulls back, maybe below the 10, even to the 21. So I wouldn't be jumping right in on this, trying to buy a dip. You can see the heavy volume profit takers here today. So be careful with that one. Earnings are not till May 25th. Anyway, we're going to move out of there to the drug stocks. Novo Nordisk, with their weight loss drugs, they raised guidance last week or the week before, and they're just hitting on all cylinders. Had an inside day today on lighter volume. That's what you want to see. Allow the moving averages to catch up. That one is doing nothing wrong. TGTX with their multiple sclerosis drug formed this little consolidation pattern here and then broke out and is now extended, from any actionable area, but it came within 2 cents of making a high today. So likely to take that out pretty soon. Viking, they're in they had a phase 1 trial. Now they're going through a phase 2 trial, which should be out, pretty soon this quarter for sure. And they have excellent science. They're in the weight loss area as well for diabetes, and they have a couple of uses for their compounds. Anyway, Viking is doing very strong, and the ACLX is another one making new highs. I mean, this is a nice consolidation period. It was really an IPO. We had this on our IPO list because it had this IPO base and broke out of it. Another consolidation, and now it's trading higher. So that one looks good. And IDYA had a positive melanoma trial this morning. Gapped up 35% with massive volume, so that is not to be ignored. They had 150 million secondary offering after hours, and the stock is still up. So we'll see how that offering is, how that is reflected in the stock price going forward. But anyway, that's enough for the drugs. I want to talk a little bit about the gaming stocks. They've been setting up in bases as the China reopen play. And people are out partying, they're gambling, they're enjoying shows, entertainment. I mean, what's not to like about Las Vegas Sands? That stock looks good. Another Macau stock here is a MLCO. This one's set up in a base consolidation for a long time, but it's got to do something here. It was up how many sessions in a row? Like 8 or 9 sessions in a row, and had a nice pullback today. So keep your eye on that one. WYNN is another one. When you talk about the resorts, you got to mention WYNN, and this is another Macau play. Just setting up here, consolidating nicely. And the other one that I think it made a new high today was Boyd Gaming. Yeah, Boyd. Got to look at the weekly charts here. Nice consolidation pattern, cup with handle, nice pullback today here. But Boyd made the new high and pulled back. But anyway, that space looks good. I wanted to talk about pullbacks a little bit because people freak out when their stock goes down. First Solar gapped up after earnings and made this little shelf-like pattern. Today it traded down after the second downgrade in a couple of weeks, and it didn't even come down to its 50 simple moving average today. To me, this is constructive action. It closed 94% of its daily range. So yeah, it did sell off, but then it, was down to 201, then closed near 210. So it's, it's a $9 bounce, So they have earnings on the 27th, and proof is in the pudding. I mean, sometimes, believe it or not, companies will downgrade a stock just to buy shares because they know earnings are going to be good. I'm not saying that's the case here. I'm just saying this is going to continue to be on my watch list, and I'm not going to just give up because of a downgrade. Speaking of downgrades, PERI, another one, this one did not respond as well as for Solars. You can see closing range is 50%, 56% of the daily range, and closed below the 50. But we want, and you can see the volume here, big pink volume bars, and that was going on last week as well. So maybe somebody knows something there. You never know. But in SMCI, they issued a revenue warning due to part shortage, and that shortage has been cleared up, so it's no longer a factor going forward. So they report earnings next week here, but it traded below the 50, and I don't want you to give up on stocks because they trade below their 50. Iridium did this last week, and it's kind of its pattern, just like SMCI. It trades below the 50, then ramps higher. It's done this many, many times. You can see there. And also TMDX was one on our leading stock list, just like SMCI and PERI and First Solar and Iridium. Trades below the 50, then ramps higher. Trades below the 50, then ramps higher. So don't give up on those stocks just because they traded below their 50 today. Keep them watching them. They're up there for a reason, and we never give up.